So the first thing they tell you is that the only way to build your credit score is with a credit card. They lied. Swipe, pay it off, repeat. Seems harmless, until you realize the system was designed to reward debt. That's not a flaw, is the whole point. Banks don't profit from your wealth, they profit from you borrowing. But here's the good news. You don't need a credit card to build your credit score. There are smarter ways that work for different people without debt, interest traps, or feeding the banks. I just want to show you another way. One that might work better for you. But before we get into that, we need to talk about why the system even exists in the first place. Because once you understand how credit scores actually work and who they were built for, you'll see why traditional advice doesn't always work for you. So, credit scores weren't always a thing. Before the 1980s, banks decided who got loans based on personal relationships, gut feelings, and straight up discrimination. You know what I'm talking about, the basics: your race, your gender, your job title, your social status, and where you lived. So, if you were a rich white guy, or happened to be friends with one, getting approved for credit wasn't even a problem. Then came FICO, a data analytics company founded by an engineer and a mathematician who believed numbers could replace bias. Their goal was to create a standardized way to assess credit risk using data and algorithms. So in 1989, they introduced their first credit scoring model, which quickly became the industry standard. Today, 90% of all top lenders use FICO scores to decide who gets approved and with what interest rate. Now, your base FICO score ranges from 300, which is a financial dumpster fire, to 850, where it's clear that you've mastered the art of credit. Now, while FICO eliminated direct discrimination, it didn't fix the deeper inequalities in the system. Just like before, the system still favored people who already had access to credit. The wealthy, they got better credit scores, lower rates, and bigger loans. Meanwhile, everyone else had to borrow, stay in debt, and constantly prove that they were credit-worthy. And this is where the system's true purpose is exposed. When you break down how your score is actually calculated, your payment history, credit utilization, the length of your credit history, types of credit you use, and new credit applications that you make, it becomes clear. It's a system designed to reward debt management. There are smarter ways to improve your credit score without taking on debt or paying interest or falling into financial traps. But not every method works for everyone. Some options are better suited for certain situations and financial goals. But here are some of these options you have instead of just using a credit card. One of the easiest ways to build credit without borrowing money is to use credit score boosting services. Normally, expenses like rent, utilities, and phone bills don't count towards your credit score, even though they're some of the most consistent payments people make. These services work by reporting your one-time payments to credit bureaus, which can help you establish a positive credit history. This is especially useful for people who are just starting out, have no credit history, or are struggling to qualify for traditional credit building options. It's also a great solution for those who want to improve their credit without opening new accounts or taking on debt. Now, you need to do some research, read some customer reviews. Some of these services are free, some are not, and the credit score increase vary. You have to remember they are still part of the same system. They just offer a low-risk way to boost your score, using payments you're already making. Another strategy, credit builder loans. These are specifically designed to build your credit score using your own money. But it's not a loan in the traditional sense, even though it's called a loan. You do not get the money up front because the goal isn't to borrow money, it's to prove you can make payments on time. This is how it goes. You apply for a small loan, and instead of receiving the funds, the money is held in a secure account while you make fixed monthly payments. During this time, the bank reports your responsible payments to the credit bureaus. Once you've paid off the loan, you get all the money back, minus small interest or some fees, making it one of the safest ways to establish credit. Think of it like paying yourself back, but with the added bonus of improving your credit score. Then we have the Authorized user hack. It's one of the fastest ways to build credit without taking on debt. It's very simple, and most people should use this if you think about it. If you have a trusted family member or friend with a long, well-managed credit history, they can add you as an authorized user on their credit card. You don't even need to use the card or make purchases. Their positive payment history automatically transfers to your credit report. If their card has low utilization, a solid credit limit, and flawless payment record, your credit score can see an instant boost. Some people report an increase within a month. You're not legally responsible for any of the debt because it's not yours, it's theirs. You just happen to have a card with your name on it that it's linked to their account. This is a great and powerful tool for parents who want to set their kids up for financial success. Think about it. Many credit card issuers allow parents to add their children as authorized users as young as 13 or 15, I don't know, it depends on where you live and what company you use. But by the time they're 18, they already have years of positive credit history, putting them ahead of the game when it comes to getting their first apartment, loan, or even their own credit card. But this only works if the primary card holder is financially responsible. And you have to be as well. If they have a trash credit history, attaching your name to their credit report is not gonna go well for you. So if you're an authorized user on anyone's credit card, friend or family, doesn't matter, be responsible. Best thing to do, not use it until you boost your score and you can get your own. And for those who want a credit card but don't want the debt from it, there are secure credit cards. Unlike regular credit cards, these require a refundable deposit. It's usually small, $200, $500, something like that. This basically acts as your credit limit. Yes, you're using your own money again, and you can only spend what you've already put down, meaning there's no risk of overspending. So if you put $500, that's your limit. Secure cards report just like regular credit cards to the credit bureaus, so responsible use like keeping a low balance and making on-time payments help your credit score over time. Some banks even upgrade you to an unsecured credit card after a few months if you've got good history, and they'll refund your deposit and increase your credit limit. At that point, you have a regular credit card like everyone else, and you better make sure that you become more responsible than you were before, because now you are borrowing their money. But not all secured credit cards are equal. Some charge high annual fees and ridiculous interest rates, so it's important to shop around. But there's so many options out there that you'll find one that will suit your financial needs in the short or long term. So yeah, you don't need a credit card to build your credit score. You just need to know how the system works and use it on your own terms, not the bank's. And now that you know that, there's something else you need to know, because credit scores are just one piece of the puzzle. If you don't get anything else right when it comes to your personal finances, it doesn't matter what your credit score is. But if you want to do that, just watch this next video.